The last week of June really is the peak of the home buying season. Activity and prices typically start their seasonal decline very closely tied to the transition into the third quarter of the year. This coming week is a holiday with the 4th of July falling on a Wednesday. So the coming data will have a dip across the board. Inventory and new listings, et cetera, all will dip over the July 4th holiday and the following weekend. And then the second half of the year curves lower. So we're at the crest now. And today we'll take a look at what the view from the summit here shows us. What can we see for the rest of 2024? Home prices are unchanged this week. The new listings volume peaked a few weeks ago. And while there won't be a big drop off in new listings in July, in general, we can assume fewer and fewer sellers each week from here on out for the rest of the year. The home prices will probably dip after next week. The seasonal peak of home prices is usually June 30 also. Now, because home buyer demand is slow this year, available inventory of unsold homes will continue to climb through probably the end of Q3. Even as new listings tapers off and as prices ease back down, the unsold inventory count grows for a few more months. And at Altos Research, we track all the home prices, all the supply and demand, all the sales, all the changes in that data every week, so you can understand the changes in the U.S. housing market immediately as it happens. I'm Mike Simonsen. I'm the president of Altos Research, and let's take a look at the details of the U.S. real estate market as we're now in the second half of 2024. So there are now 646,000 single-family homes unsold on the market across the U.S. That's up 1.8% for the week and is 39% greater than a year ago. It's an increase of 11,000 unsold homes for the week. That's a pretty big gain. It's a little more than we had projected for the week. And I think it illustrates continued very soft homebuyer demand. Right? It seems quite likely that inventory will continue to expand until October. In the years before the pandemic, inventory would have peaked probably in August, but it seems like that seasonality has shifted later in the year now. And this is especially true if mortgage rates keep pushing higher, which it looks like they are right now. Higher rates create more inventory. In the inventory chart here, you can see that by the next week or so, we'll have more unsold homes on the market than at any time since early pandemic. In July 2020, having only 646,000 homes on the market was shockingly low. Now it seems like a lot, but it's not a lot. But the longer mortgage rates stay higher, the closer we'll get back to those old normal levels of selection for home buyers. So as we look at inventory for the rest of the year, expect that the market will peak in October with roughly 700,000 single-family homes unsold in inventory. At the end of the year with roughly 20% more homes on the market than 2023. So 2023, remember, had a late surge of inventory growth when mortgage rates pushed over 8% in October last year. So if we have another surge in rates like that, we'll end 2024 with 30 or 40% more homes on the market than the previous year. But assuming they stay around here in the sevens, it'll be about 20% more than where we ended 2023. So there were just under 71,000 new listings of single-family homes unsold this week. That's down 1.5% from a week ago. Slightly fewer sellers. And if you add in the 15,000 immediate sales, that totals 86,000 sellers this week, and that's not very many. It's 8% more than last year at this time, but it's not a lot. And it's not climbing either. So there won't be a big drop off in the new listings volume in July. We could see another couple of weeks with in the 70s, meaning like a week with 70,000 or more new listings unsold. We could have a few more weeks of that. But there haven't been any signs of sellers accelerating. So there's no suddenly a sign of like a lot of sellers in August or anything like that. So the question is, how rapidly do sellers pull back? So it's helpful to understand and compare this year to 22 and 23 So in 2022, inventory was really jumping at the end of June. That was accelerating sellers and slowing buyers. Both were happening. After July 4th of 22, the sellers pulled back and suddenly the inventory imbalance was a lot more balanced. And you can see that pullback in the light red line in the middle of the chart here. In 2023, sellers stayed away all year. And that seller drought was really the biggest story of the real estate market in 2023. So now we're getting a little bit of elements of both trends. If this market is going to get fully out of whack, that would need more sellers hitting each week, and we just don't see that. Inventory is building because of demand weakness. So if you're of the view that the housing market will get hit again with supply, for example, when people lose their jobs, that we'll finally see seller growth once recession hits. So that may be true, but two things to keep in mind if that's your hypothesis. The first is that is not in the data now. There are no distressed sellers yet, and there's no growth in new seller volume each week. It's declining like it would normally for the season. The second thing to keep in mind is that it usually takes a year after the spike of unemployment before we see a significant surge in inventory. So unemployment is inching up now, but not very high. So let's say the worst case scenario for the economy hits and companies rapidly downsize in the second half of 2024. So that really means it's late 25 or even 2026 before we see distressed inventory hit the market. So it could come, but we're probably looking at 2026 now before we see it. There were 67,000 new contracts pending started this week for single-family home sales. So that's a fraction fewer than last week. It's basically unchanged from a year ago. So even as new listings volume isn't really growing, neither is the sales volume. And so there's very little encouraging in the demand side of the data now. What does this mean for the rest of the year? It means that home sales will stay, around this 4 million annualized rate that you probably heard in the headlines. The sales rate is a lot lower than I expected at the beginning of the year. And that's a function of mortgage rates staying higher for longer. 6 months ago, it looked like buyers were going to see some affordability improvements and therefore transactions would increase. But mortgage rates stayed higher than they were a year ago. They're higher than they were 6 months ago, and they're heading up right now. So buyers haven't caught any break and they know it. So right now, we don't see any evidence of home sales volumes increasing. The median price of home sales that started this week is $395,000. So the price of the new pendings. This is where people are buying homes. So home prices peak in June. So you should expect this number to track lower in the next few weeks and months. The question is, how steep is this curve decline in the second half of the year? 2 years ago, we were seeing rapid deterioration in home prices as mortgage rates spiked. I've highlighted in the gray here 2 points where home prices dropped in 2022. Last year, the decline in prices the second half of the year was much more muted. So we ended 2023 with home price gains over the previous year. And what I'm expecting now is that the dark line here has a steeper decline than the red line in 2024. So as the rest of the year finishes, so that by the end of the year, we show very little home price appreciation over 2023. So these are my expectations, but it's notable that that compression hasn't really started yet. I expect it to start, but so far through July 1, you can see that the pending prices in that dark red line here, those are still plateaued about 3 or 4% higher than a year ago. Meanwhile, the median price of all the homes in the US is $455,000. That's unchanged from last week and from last year. With this measure, Altos simply counts every home for sale in the country and takes the median of those homes. This is a leading indicator of future sales prices. The asking price is stable and has not started declining. Like I kind of expect it to, but at least a little bit, but we haven't seen that yet. And the median price of the new listings this week was $429,000. So that ticked up for the week and is actually nearly 4% higher than the same week a year ago. The new listings price will drop with the July 4th holiday and then generally recede for the rest of the year. And as mortgage rates stay elevated, the home buyer demand remains very soft. And as a result, price cuts are still obviously climbing around the country. So 37.6% of the homes on the market have taken a price cut from their original list price. That's 70 basis points more than last week. It's pretty high, though it's not disastrously high. It's rising quickly, though maybe not disastrously fast. So at this point in 2022, when mortgage rates were rising first so quickly, price reductions were also jumping at a pace of like 140 or 150 basis points per week in 22. And right now it's 50 to 70 basis points per week. So that 22 run up led to home price declines in the first quarter of 23, like about a 6 or maybe even 8 month lead time. The run up now is softer, but it's real. So when we look to the future based on what we can see here, this is why I continue to expect flat home price appreciation for the second half of the year. It's hard to make this call for me because so many of the price measures, like the pending sales price above, they actually haven't started compressing yet. I expect them to, but they haven't. Or you hear the headline home price data and it's still at record highs, like the Case-Shiller last week. So I expect this to change, but it hasn't changed yet. So I always have to ask myself, when do you change your expectations based on the new data? But that's what we're looking for in the second half of the year. These leading indicators point to home price weakness, even if the contemporaneous measures haven't really started receding yet. So keep your eyes on this data. I'll either be correct soon or I'll have to form a new view. So that's why we do this work each week. Home buyers are obviously very sensitive to the cost of money, and mortgage rates have stayed higher for longer than anyone anticipated this year. They haven't come down yet, but neither have home prices. And so if you aren't watching the data each week, you're probably behind the curve. And your buyers and sellers need to hear the data from you. You should join us at Altos Research. Go to altosresearch.com, book a free consult with our team. We'll help you know how to talk about the market with your clients and prospects today. There's a link in the description below. Click that to join us. Let's get started.